Hello everybody, my name is Michael Quinn, one of the directors of the Quinn Group, and this month on Quintessential TV we'll be discussing Workcover Premium Audits. They're also known as Workers Compensation Audits. It's quite a hot topic. There's quite a few audits being conducted by Workcover and the insurers in New South Wales. So how does it work? Well, an employer is selected for audit by either Workcover or the insurance company. There's currently 7 insurers in New South Wales. There's normally a letter or a questionnaire that's sent out, and that covering letter provides the auditor's details, and then a few days later the auditor sends a separate letter or gets in contact with the employer and requests further information, and this further information includes wages records, detailed wages records, detailed MYOB files if you're using MYOB or Xero or QuickBooks, and also financial statements and income tax returns. Bearing in mind now that the ATO, the Australian Tax Office, shares a lot of information with Workcover and the offices of state revenue throughout Australia, so their data sharing has never been higher than what it is currently. The audit normally covers 4 to 5 years. Why do they undertake audits? Well, basically they want to make sure that an employer is paying the right amount of premium per year. And how that's calculated is on the basis of wages multiplied by an industry rate, depending on the type of industry that you, the employer, are in. But wages are very widely defined. They're defined as salaries, bonuses, commissions, overtime, sick leave, long service leave, payments to directors, in the case of trusts, distributions from trusts, etc., etc. So they are defined very widely. They're also wanting to check that all employees have been included in this calculation, even what's called deemed employees under the legislation, and we'll come to that in a second. Sole traders and partnerships can be considered deemed employees under certain circumstances. That's the big issue for workers' compensation audits. What we're looking at is the definition of employee versus contractor. The definition under the workers' compensation legislation is different to the taxation legislation. So if you have sole traders and partnerships, in some cases they can be included under the definition of wages because they're considered to be deemed workers. However, if those sole traders or partnerships have their own certificate of currency, in other words, they pay their own workers' compensation premiums, then they're excluded for calculation purposes. And if they have, these are sole traders or partnerships, have the indicia of a bona fide contractor, then they are also excluded for the purposes of calculation. So if you'd like to know more about these workers' compensation audits, or you need some advice in this area, please contact us. You're welcome to email us at info@quinns.com.au. We'd love to get your feedback in relation to Quintessential TV, so please like, comment and subscribe. We look forward to seeing you all next month. I'm Michael Quinn. Bye for now.